Hello, everybody, and welcome to another edition of Bleeding Crypto's market update. Today is Wednesday, March 15th, and I believe the last update I did was either Saturday or Sunday. So I'm on the same chart. Let me start off by just hiding these indicators. I'm on the same chart that we were talking about the last video. I haven't made any changes on here, so I do have to make some changes. I want to do them live because, as you know, this is a continuation video, and I want to make sure that people who are following along, who want to understand how my process works and what I look at and what I think of, and that are following along could leave off and then start the next video and not feel like they missed something. So that being said, let's go ahead and just shrink just zoom in a little bit here. We'll get a little bit more real estate on the screen. Before I start, guys, if you could please do me a favor, hit the like button, guys. It really does help me out a lot because the algorithms that propagate through YouTube will allow this video to have more exposure. So if you can please do that, that'd be I'd appreciate it very much. All right, so when we were talking on this video, the last time we were talking on the video, better said, I had two probabilities. One of the probabilities was to come back into here. If you recall, this was a 382. This lined it up with the 382, and then a bounce to here, and probably more than likely resistance in this area here, which was prior resistance and support in this area here, and then a 70% chance that we come back into here. Guess what? The market said, nope, I don't think so. It flipped these, and it ended up going here and much higher than it did here. So it goes to show you guys, you can map out things where you think it may go, and you have certain metrics that you follow, that you look at, and at the end of the day, the market's going to do what the market's going to do. But that's part of trading, guys. You're not going to get it right every time. You're going to continue to do the same thing. You're going to live by the same rule set, because if you establish a good rule set that plays out more often than not, you have to stick to it. You can't change it every time it doesn't go your way, or it's not a rule set. You're going to be just winging it every time. So that becomes more difficult, as long as it works out more often than not, which means there are going to be at times like these that it doesn't play out the way you think. And that's part of trading, guys. So let's go ahead and do this. I'm going to go ahead and erase these arrows. And then we're going to talk about what is a probability of what's going to happen next based on data. So this show is actually probably going to be a little long. So if you want to play it at 1.5 speed, if you go to the settings wheel on YouTube, I believe it's in the upper right hand corner, you click on the settings wheel, it'll say playback speed. Click on playback speed, and you can put it at 1.5, 1.75, 2. I think 2 or 1.75 might be too much, because I tend to talk really fast as it is. So I think 1.5 speed will speed it up and get you through the video much quicker if you choose to do so. So let's go ahead and see where we're at and what I'm thinking. All right, guys. So this line here was the 25,200 was a very key area for me. It was an area where we have not been able to break out of since August 15th of last year. It was the top of the what I consider 3 lower highs. It was the last lower high to break to reverse the trend. When that would have been broken, then I would have been inclined to believe that we are reversing the trend and we're heading higher. So many of you guys will look at this and say, yeah, well, we broke it. Not necessarily. Here's why. First of all, when I say we need to break that area in order to reverse the trend, there's a lot more to that sentence that I'm not explaining. But those of you who understand how I work and have taken my education program and are in my Discord, you understand that when I say that, there's a lot more to it. It's a loaded statement, meaning that I want to see a respectable acceptance above that level. So I want us to stay above that level, whether it be by creating a higher low and continuing, which is a lot more difficult after such a big move that it just recently did, or at least find some consolidation. When you have consolidation above that level, you start forming a base for a move back up. So typically when you have a large area of resistance the way we have for so long, what is it, like 6 months or so, or maybe even longer, and you flip it and you consolidate, that becomes a very bullish move in my eyes. It shows that we're starting to establish a foundation. This is where they're defending the price. This is the new area of support. We're flipping the old area of resistance. We're turning it into support, and the likelihood is that we'll be moving up. When we have this here, what this tells me here, I'm gonna zoom out to the weekly real quick because I want to make my point right here. What this tells me, this was just a stop loss, a grab, a liquidity grab. That's all it was. It basically came in here. It was a deviation, took out these stops, and came right back down to the same level that once again for the past 6 months. You know what? I'm actually going to measure because it's bugging me. Here to here, 210 days. Yeah, over 6 months. We failed to break it. So that's all this could be. Now, it's not confirmed yet. It could be, as of right now, that's what it looks like. What's going to change my mind? Like I said, close above here, consolidation or continuation will convince me that this was more than just a stop hunt. Okay, so now that we've established that, I want to talk about, let's see here, where do I begin? All right, I want to compare the move that we did back in 2019. Now, this next explanation that I'm going to give is going to be for the bulls. I've been trying to keep this video very non-biased. I've been giving a case for the I've been trying to give a good case for the bulls and a good case for the bears. So this next segment here coming up is going to be for you bulls. I hope it's not you perma bulls, because you shouldn't be a perma anything in this market, because that's how you can lose a lot of money. You want to stay as non-biased as possible. Look at the charts, allow the charts to direct your positions, and go from there. So for a bull case for continuation and where we could be looking back at history, I think we're here, and I'll explain to you why. Let me go ahead and just reset here. Let's go here. Let's move this up. All right, looking back at 2019, I look at this here and I think to myself, this, where we're at right now, seems very similar to, to this one right here. To not even this one right here, this move right here. Even though you have to also keep in mind that we haven't done a move this drastic like we did back in 2000. We haven't done it in this recent times like we did here. This was already up like 200 something percent. So let's just be fair about that. Yeah, almost 200%. Almost 200%. We haven't done, this is a 35% move. Just looking at market structure. That's all I'm looking at right now. Market structure wise, the way the way we're deviating above this resistance here, above this resistance that we were here. And let me snap this line here. And I could be wrong. I'm thinking out loud. I'm trying to find some confluence with prior data. That's what we do as an analyst. We try to come up with a thesis, and in order to come up with that thesis correctly, not using our bias, is we look back at the charts, we look to the left of the charts, and we try to find some confluence to similar price action, similar setup, similar market structure. And looking at this, the way this was resistance here, going back again quite some time, and then we had this deviation here, this sweep of stops. That's kind of how I feel like we are now, keeping in mind that we still have a possibility, like we did back then, of hitting the underside of 0.618 before coming down. Now, when we came down, guys, this was June 24th. And after the Black Swan event, before we kicked off that bull run, it was March 9th. So that's a 9-month span. Now, Black Swans obviously is not something that we want to try to anticipate. They're called black swans for a reason. It's not something that we're going to try to map out. It's not something you can map out. And we don't even know what's going to cause it, if even there is going to be one. So we have to kind of take this area here, even though it was a tradable event, this did find support, this was traded. We have to be careful that we don't rely on a black swan event to fit our thesis, because you're really shooting for the stars there. If you're waiting for a black swan event to get some fills, that makes it really difficult because it may not come. Okay, so taking this out of the equation, taking this black swan out of the equation and looking at just this price movement here, we went from June 24th to December, 6 months. So we had about 6 months, a little over 5 months, better said, until we started having, we had a nice January right in the beginning of February. Obviously, that's when we started seeing some weakness. So the black swan event was this, but we already started seeing weakness in the beginning of February here. So who knows, without that black swan event, could we have just retraced some normal retracement and then a continuation? We were already on our way, in my opinion. If we were to remove this, just this section here, I believe we were already on the way to our bull run. This just happened to allow people who had stink bids, who had bids working to the downside, who looked at 2015 possibly, because remember, these patterns like to repeat themselves quite often. And if you look back at the 2015 bear market, when we came out of that, we did exactly that. It wasn't part of a black swan event, but we did come back and test the lows before going into our new run. So I don't know if you guys recall that. You know what? Let me see. This is the Binance. It's not going to have that. If you look at the index chart, or if you look at the Bitstamp or Bitfinex chart, you'll see in 2015 we had two touches. We had a low, then we had a confirmation, a back test of that low, I think within a 4 month span, 4 or 5 month span. And then from there, you see this. So in any case, where we're at now could be somewhere in here. So when you think about that and you fast forward to now, here we are. Here's that deviation. Again, I'm not certain, but I'm trying to make a case. I'm trying to not just be bearish and say, oh no, this is it. This is the top. We're gonna go straight crashing down. No, let's see. If we're gonna continue, we have to make sense of it. So before we can say we're gonna continue, we have to think of one major thing. We have to get above 25,200. I think we can all agree on that. We need to get above 25,200. Now, if we do that, what next? Does that mean that we're going to go to 618? Well, let's see where's that 618. I've done a video on this before, but just to refresh everyone's memory, let's just go ahead and map it out. Okay, here's 618, sitting at $48,000. Here we are now, and here's 618. So that would be 96%. And let's just say, for shits and giggles, let me just measure what this is here real quick here, and how close would we be here? Top of that to 618, 40%. So about twice. Actually, no, I'm sorry. To the top of that, 50%. No, okay, all right. This deviated above 618, so that's why I use it here instead of the 618. I'm not counting. We could have a deviation like that, or we can come a little bit short. I just wanted to, just for my own personal knowledge, wanted to see what that percentage was, and it's a little bit higher than what it was back then. But in any case, we also ran much higher. We haven't ran 200 and something percent like we did back then. As a matter of fact, let's take a look at what we have ran to compare back then. We said 195%. We measured. We're at 70%. We're at 70% compared to 195%. So it's not the same. But again, just looking at market structure, looking at the deviation, looking at this resistance, going back then the way I showed you, in my book, I'm going to use that as a point of reference. So now, could this happen? Yes, it could. But think about it, guys. Is it probable? Could we almost double from where we're at to here? Think about the state of the world, the broader markets, the state of the world, where we're at. Do you see everyone rushing into crypto right now, abandoning stocks, coming into crypto, pushing us up to this area here. I don't see it. Maybe I'm looking at it wrong, but I don't see that. There was an interesting data that I saw yesterday, and for those out here who are listening to me who are better versed at the world economy, at the broader markets, you please correct me if I'm wrong, and I'm going to try to find that data so I'm going to try to have it ready in case somebody wants a reference to it. I was looking at some data yesterday going back, I believe it was for the past 4 recessions, and I believe it was to 1960, and it showed that when the Feds start cutting rates, the stock market, broader markets drop sharply. In one of the years, it dropped 53%, but on the past 4 recessions, the average was 35% when they start to cut the rates. Now, we haven't had even an announcement of them even pausing the rate hikes. So we're not there yet. So keeping in mind, if that were to happen, where would that put crypto? It's going to be one of two things. The Bitcoin maxis are going to want to see Bitcoin start being used as what it was intended for, a hedge against inflation, a hedge against the possible collapse of whatever monetary system or broader markets, whatever the maxis believe. I'm not quite sure, but I know that they want everyone to move into a Bitcoin world. I don't think that's really plausible, but again, that's kind of what they think. Or do we go by the data that's available to us? And what I mean by that is, since Bitcoin was created, have we followed broader markets? Have we been going up during a bull run of broader markets? If you look at the data, the answer is yes. Broader markets fall, we fall. Obviously, there were other circumstances on this particular fall here that led to a really deep retrace with the 3 AC and the Celsius and all those implosions. But the fact of the matter is, we started falling with broader markets. So now, if broader markets are historically set to fall once the Feds announce rate cuts, if they do follow history, which again history says it will, where does that put us? And how far can we run before that happens? If you don't want to believe that we're correlated, see, here's a problem with people who have a bias. They only want to believe the data that fits their bias. So the people who are only bullish, that you read their posts on Twitter, and all they comment on and all they post is bull. I don't have to name anyone. You guys by now should know who they are. So they will only accept data that supports a bull bias. They don't want to hear it. If you say anything on contrary, oh no, you're just a bear, you're just being negative, I'm just an optimist, I don't believe in pessimism. It has nothing to do with being a pessimist or an optimist. It's about how do you interpret the data? How do you view the data? Do you view the data as something that creates a certain what's the word? I don't want to say bias, but it creates a certain reaction into the market. So when Feds cut rates, markets drop, and it continues that same pattern, why would you believe it would be any different this time if it's happened for the past 4 recessions going back 40, 50 years? In my book, I'm not going to believe that this time it's different. That's the most dangerous statement that I think anyone can make when in regards to any type of market. This time it's different, without any bias, without any data. When you have data going back that far, you cannot say that, oh, no, we didn't have wars, we didn't have inflation. No, we've had the same turmoil that we've been having, that we have right now, we've had back then. It just doesn't seem as severe as it was back then, but you weren't living back then. Back then, it felt even worse To you, it feels incredibly worse now than it did back then. And I'm sure the crisis coming up in the next, 4 or 5 years is going to seem worse than it is now. And in reality, nothing really changes. You look at these charts. The charts, again, they do the exact same thing. They show the greed, the hopium, and they show the fear. The same fear, when you look back at the markets, same thing is reflected. Is the same fear repeats itself, the same greed repeats itself, and the markets continue to develop into a certain market structure that allows us to analyze that behavior when that fear happens. That's how we get these support areas. So what happens when we have fear? We stop at a certain place where people get happy again, and then the fear comes back down. And then people get happy at the same spot for whatever reason, and they start pumping it back up here. Then they start getting fear around the same time. Look at that resistance. And that fear comes back again, and then people again start getting happy around the same time again. That's how you establish these support and resistance. People are not happy during this time. Very few people are happy during this time. Everyone's happy here. Everyone's scared here. So when those types of patterns continue to repeat itself, that's how we establish these support and resistance. And we can utilize that. Look at this drop. Look at this drop. We dropped into an area of prior resistance and prior support where people were happy again. And look what it did to the market. The happiness continues to flow upwards. Now people are getting scared again, and it shows here because we didn't see that continuation. Does that make sense? When you look at the charts like that? So, moving forward, where do I see this going? Well, I told you, I gave you a scenario for the upside. To me, it's not as likely, to be honest with you. But look what happened Look what happened the last video. I said 70% to the downside, and it went up the complete opposite. So could it happen? Absolutely. The reason I say this is just because of the affairs of broader markets and how bad they're bleeding, especially with all the implosions, what's going on with the banking system is what makes me less inclined to believe that we're going to go up to $48,000. And we're back in the same area. We can't break this area here. We can't even consolidate above this area. So looking at this here, looking at treating this as a liquidity sweep, I'm more inclined to believe that we're probably going to see a little bit more downside. Now, it doesn't mean that we're going to go down to new lows or test the old lows. We've got to take it one step at a time. Here, we've got 4 days and 10 hours for this weekly candle to close. So let's do this. I think this would be a fair assessment. If we close below here, we start diminishing the probability that we're going to see follow through. If we can close this weekly candle above this resistance that we have not been able to close above, it now increases the probability that we may be going higher. Now, one close does not solidify that we're going to go higher. We can easily close and then come right back and come and start heading down. So we need to establish a base. We need to be able to close here. We need to be able to maintain a structure in here. We need to start seeing some bullish structures, some sideways consolidation, allowing the oscillators to cool down. Then we can talk about higher targets. Same thing for here. Exact same scenario. We can't assume that we're going to go down when we're still in this candle that gave us this deviation. We've got to wait for this to close. Once this closes, we've got to see, are we getting rejected? Like we are in smaller time frames. So this would be a zoomed in look of what I'm looking for higher time frames to give us that more direction. The hourly time frame, guys, is not going to really show us direction. It's going to show us local moves. If you're a day trader, a scalper, this is what the hourly is good for. The weekly, however, has a lot more influence, has a lot more power. It's more directional. This is not going to really dictate or give us much insight to the macro picture. A weekly time frame, much more so. But looking at the hourly, I'm using it at the moment to explain what I'm looking for on the weekly. You see how we found rejection here? We found a little bit of rejection, not too close here, but we got rejection here nonetheless at 25,000. We hit that line once again. We got rejected, follow through. So we're not seeing that strength that we want to see to get up here. Doesn't mean it's not going to happen. It's just right now not looking as good. The follow through is not as great. Let me just look at some of the EMAs here, some of the key EMAs that I like to look at. As you guys know, I use EMAs for my trading system. To people who are not familiar, who don't use EMAs for their trading system, may not understand or may not even count them as something viable. For me, they are. I trade them in a certain way where it shows me the strength of the move. It shows me the strength of the market structure. It shows me how when we're consolidating and they're pinching, we're going in an uptrend, I'm looking at the higher time frames to be moving up. I'm looking for the crossovers. Right now in the hourly time frame, we look good. We are above most EMAs. So we're not in a bad position. Though we are rejecting on an area that's not good, at the end of the day, we have more to the downside of support than we do resistance. So we only have really this as a resistance, and that's really it. We can't even call this resistance quite yet. We just had one tap in here, but look at the amount of support. We have a lot of support to the downside. So the people who want to make an argument that, we're gonna just come crashing down. Well, let's just pause a little bit on that. We've got a lot more to the downside support than we have resistance, so we can easily climb up. Now here's another scenario, very typical pattern, a double top. Now look at this. If you guys can see this double bottom here, I can easily make an argument for this double bottom. Very similar to what we did right here. Let me go to the 4-hour time frame. Sometimes you can see them a little bit better. So remember this double bottom that we talked about on the last show, double bottom, and then we have what one of my favorite patterns, a W. And look at that, we completed that W just nicely, right? Remember we saw that until we saw that pullback down here. Okay, well now look at this here. We've got a very similar structure, which means that we could easily complete this W, pull back, and then continue. Or we can check this area once again before coming down. There's a lot of, obviously, I always think of the comments, oh yeah, so you're saying it can go up or it can go down? Obviously, I'm saying that. But trying to understand what's going to cause it to go up and what's going to cause it to go down and picking the highest probability is what you do as an analyst. If you can't understand that, then you really don't understand what a job of an analyst is. The job of an analyst is not to predict where the price is going to go. I'm not going to sit here and tell you, or any analyst for that matter, is going to say, oh, yeah, we're going to go up. Definitely, because of this. No, we don't know. We're trying to find what would be needed for us to increase our probability for the upside and what would be needed to increase our probability for the downside. If you can make a case for that and you start seeing it play out and fit that thesis, then you have a better understanding of where the probability may go. And even then, it may just shit the bed because of some news, some event, some black swan, some implosion, some liquidation. There's a number of things that can affect the market. But as long as the markets are not being thrown into chaos by outside influences and we're just chugging along here, we can start developing these market structures that play out more often than not, hopefully giving us some direction. So going back to what I was saying about this double bottom here, if we can break above here and complete that W, that begins the hopefully the beginning of the foundation of finding acceptance on top of this area. That has to be number one. We have to get above here. So what could cause us to get above here? Well, I'm looking at a case of a double bottom, and double bottom completions would be right here. So that's another reason to get up here. This could have been a liquidation sweep, a stop loss hunt. Great. Okay, we got up here. We found a reason to get up here. We got up here, we failed. Okay, let's try it again. We put in a bullish market structure, a W. You can see the W better on the hourly time frame for those here. There we go. You can see a little bit better here. So now we're giving the market another reason to come up here. Okay, boom. The more reasons we give it to come up in this area, the better it is. If you're wanting to see continuation, the better it is for you guys, for those who want that thesis to play out. So whatever the reason may be, I'll take it if I want to see a continuation. Anything to get us up here. Anything the longer we move up here, you know what happens, guys? Remember these support EMAs that I'm talking about? Look, the longer we stay up here, see how these are curving up. You have the 200, the 300, the 100, the 120, the 50. They're pointing up still. So we can stay up here. These start to climb up higher, and they will help with that support. The moment we start getting EMAs to cross above 25,100, it's telling you that the price has been staying here long enough within 9 days for the 9 EMA to stay up here. If we can continue to stay up here and get the 30 EMA to come up here, that creates, again, that base. Okay, now we've got the 9, now we've got the 30. We're finally trading above the 25. Even if it's just scalp trading, doesn't matter. We're holding above that long 6-month resistance area. That's how it starts. Then you start building a consolidation as these move higher and higher. So that's hopefully what we see in order to see a much further upside. Now there is something that I wanted to talk about. Let me see real quick here. Okay, I'm gonna show you HyBlock. This HyBlock, I set it to 7 days. So there's several settings. You can put it for a 12-hour, 7 days, a month. What that means is that it shows you the past 7 days and how the price action, I lost the wording. How it behaves with that heat, that liquidation heat. Now, I want to explain myself again. When I say liquidation heat, guys, I say for simplicity. This doesn't mean liquidity. This means that there's contracts that are going to get liquidated. And if they get liquidated, obviously that's money for market makers. But again, the simplicity of it, I'm just going to call it liquidity. Now, so you can see the price action, how it works, and how that heat starts to build. So I hate that these little boxes show up, but these boxes do contain data. But if you can look at this price action here and look at this green here, look at the way it gets brighter and brighter and brighter, and that's a reflective of this. You see the left of this bar? You see how you go from 0.5 billion, 1 billion, 1.5 billion, 2 billion. So the brighter it gets, the more contracts are set to get liquidated. And look at the way it builds and builds until it gets yellow. And then look at what the price action does. Boom, breaks it. Goes right through it and it knocks out all of this shade. So it knocked down from here to here. It knocked out all of the shade. And then look what it did. It comes right back down. And then during that time, this was also building up here. And then look what it does. It comes back and taps it. And then it comes, and then look right here, it has a little bit of a pullback, and this is building up as well, and comes back and takes it out. Then there was not much here, not much reward. It just starts going sideways, sideways, sideways. It starts going down, and then look at the way it comes up to this heat that was way up here. You think, oh no, we're down at 21,000. You think this is gonna go up to 24,000? And look, that's money. This represents money for the market makers. So you can see the behavior and why I follow this data. It doesn't happen right away. That's a problem with a lot of people, that when I post this and I say, look, there's heat up at 24,000, there's heat up at 26,000, and we're down here. People are like, oh, it didn't happen. If it doesn't happen within the next hour, no, it doesn't happen, you're wrong. No, the market is not in a hurry. Only you are. We were here. We were at 22,000, and if you look down on my feed, guys, or you follow these videos, it's been up here for a while. Look, he was building up here, and yet it took some time. from March. It took a couple of days. It didn't happen right away, but it happened nonetheless. Now, it's not guaranteed that it's continued to go up here, but at least you can see how sooner or later, market makers like going for those bright areas that represent a great payday for them. Now, I'm sure you guys are noticing something on the map that I haven't mentioned yet. Those who are not biased can see it. Those who are full optimists, full perma bears, they're like, no, that won't happen. Look at where we're at now, and you look up here and you look down here. What has the highest reward for market makers? What has the highest reward? Do you see this bright yellow? That has the highest reward. Now I'm going to show you something else. Look at this. Look at this. These are the liquidation levels. Now I want you to pay attention to this number. 483 long liquidations. How do you liquidate long contracts? By dropping. How do you liquidate short contracts? By going up. Look at the delta. Look at the delta. Right now, it's reflecting what this says right here. The market is betting that it's going to be a lot more upside. They're betting quite a bit of money that it's going up. Now, take a look at the heat map again. Take a look at the heat map. Look at this yellow down here. Remember, this is inverse. So now, if the market, you saw how many contracts versus shorts to the upside, people are posed to get liquidated, meaning that if the price comes down, it will liquidate those 486 contracts depending on what their leverage is. And that's why this heat shows that if the price goes down, inverse to the other chart that we saw, where it shows everyone's going up, this shows that correlation. That this shows what happens if we come down, the market makers get paid. Your reason for believing in Bitcoin is not valid for the market makers. They don't care about the reasons. They don't care about your projects. They don't care about your altcoins having releases or coming to market. All they care about is this, making money. That's all they care about. They don't care how bullish you are about Bitcoin. All they care about is where are you placing your bets. Wherever you're placing your bets, they want to come after it. So if you're placing it to the long side, the more you long, it shows here. The more you short, it's going to show. It's going to show here as well, because obviously, if the price goes up, it liquidates those shorts. So this is almost a measurement. You can use this again as a measurement of human emotion. This here tells you where people are, where emotions are laying. And right now, the emotions are very high to the upside. The bulls have a lot of emotion because the heat is down here. So always think about the inverse right here. I hope this was educational enough for you guys. Let's break it down for a short, let's break it down here for a 1 hour, what I'm looking at in a very low time frame. We've got rejected a few times here. Where can we find support? Obviously, the first area of support that I'm looking at is going to be right here. Why right here? Because this was our area of resistance. So what I'm going to do here is do this, guys. I'm going to change this from red to green because now we have flipped. See how we were using this? The last time we were using this was a red because it was resistance. Now we've confirmed it here. We're waiting. We're looking at this as our next level of support. That's it. We're just going to wait. We're not going to start thinking, okay, it's going to drop here, it's going to go there. No, let's take it one step at a time. Right now, we can easily find support here and bounce. We very well can. Or we could complete this double bottom bullish structure, get here, and then we'll take it from there. But for right now, guys, I'm not even going to call it probability because it's very difficult. Looking at this here, to me, doesn't give me a very high conviction rate either way. I see a bullish market structure, yes, but I also see the 9 EMA about to could possibly bear cross with the 30. And that is not a good sign, because once that happens, it's just reflection of weakness in the market. And as these 9 comes down and crosses bear on these higher time frame EMAs, it just shows a sentiment. So there's not a lot of, it's not very convincing, especially since we are rejecting off a very difficult 6-month resistance. Though we're putting in a bullish market structure, honestly, I don't have I don't have a probability either way. Honestly, 50-50 is unfortunately what I have to give you. Nobody wants to hear that. Everybody looks at you for direction. Oh, you have to know which way it's going to go. No, I don't. Maybe somebody smarter than me knows, but for the time being, I don't know. And I'm going to I need more data to come in order to try to see if I can find some direction. Right now, looking at the MACD, we have reset, which is actually really good for the bulls. So if you look at this here and the fact that we have reset and we're so close to the support and we're holding on to we haven't lost the 50 EMA, this can possibly well give us that continuation, to finish this double bottom. And then we'll go from there. RSI, 45 points, not very strong. And OBV is pointing down. Let's look at OBV. OBV is not, it's reflecting the sell-off that's going on at the moment. But nevertheless, look, it could very well bounce from this area of right there. So let's just map this real quick. Look, we've hit this area as resistance. We broke above it, and we're coming back. We're back testing it. We easily could just start pushing back up. So you can see kind of that pattern as well here. Look at this pattern here. Look at this pattern here. We were resistance here, resistance. We dropped. We broke above it. We confirmed it. We doubled you. We put a bullish market structure, double bottoms, the W, and then we took off. Even with an OBV, you can see how well support and resistance behavior is. We find it. We find a support. We break above it. We get bearish. Look, we get bearish. We put a double top. Look at right there. Look at that. We put a double top and we break down. We put a W. Again, bullish structure. We get back up there. Then we put in a bearish structure and we break down. We try to come back up. We find resistance again. We put in a double top and we come back down. Bunch of double tops continuing as we go down further. Every time we pump up on what? We pump up on a double bottom. You see that? Every time we go on a double bottom. Market structure works the same way. You look at these market structures, long enough, you start to identify the same thing you saw in the OBV. Sometimes you can even do this. You can even, if you want to clean it up a little bit. I'm going to show you this. Hold on. First, I'm going to change. I'm going to hide the indicators. I'm going to hide everything actually. Hide all. And if sometimes you want to see a little bit cleaner, you may want to look at it on a line chart. Look, double bottom, W. Always look for W's and M's. Look, M, we go down. W, we go up. W, we go up. M, we go down. W, we failed. We come back down. We're trying to put in those W's. The market right now is trying to find a way to get back up there. Doesn't mean it's going to find it, but it's definitely showing us that it wants to get up there. We have to give it time for direction. I just don't know at the moment, guys. So I will keep you guys updated. Every 2-3 days, unless something like over the weekend, I was doing them every day because there was a lot of stuff going on. So I want to keep you guys informed. I'm trying to grow my channel, guys. I need your help to grow that channel. I need you to hit the like button if you can, please. And I'm going to continue to support the channel by giving you guys the information. And hopefully we can get some sort of direction coming out of today. Today's Wednesday. Let's see how the rest of the week plays out. If I'm not mistaken, I think there's another set of news coming the rest tomorrow or Friday. I'm not 100% sure, but nevertheless, I will keep you guys informed if there's anything drastic. For right now, this is the 2 key areas you're going to look at. You're going to look at this for support to hold, and you're going to see if we can break out of this resistance. Just focus on this. Nothing else, guys. Your attention should just be right in here. Support, resistance. Can we get out of here? Everyone have a really good day.